Once again, welcome all of you. Fundamental analysis. For investors, dividends and price changes of the stock are two most important components for return. Investors are neither sure about the dividends nor about the stock prices over subsequent periods. The uncertainty prevails because in the real world of investing, the impinging forces like economic, social, political, and other make it difficult to predict anything with certainty. In fundamental analysis, an analyst essentially examines the economic environment, industry performance, and company performance before making an investment in the stock market. It is thus a three-step examination. A fundamental analyst makes its use to arrive at the intrinsic value of the firm's securities. If the intrinsic value is found to be more than the prevailing means current market price, the investor buys the stock. In fundamental analysis, an analyst essentially examines the economic environment, industry performance, and company performance. Step first, examination of the economic environment. It involves understanding of the macroeconomic environment and developments. Second step, analyzing the prospectus of the industry. It involves examination of the supply and demand forces with reference to products offered, substitute products, industry cycles. Now we see the step third, assessing the projected performance of the company. It involves an examination of financial data, management policies, business vision, competitive strength of the company. Fundamental analysts first concentrate themselves on national economy, then analyze the industry performance, and finally the individual companies within an industry. This is also known as economy, industry, company, or we say ETC framework. Economic analysis. The aim of economic analysis is to predict the direction of national economy, that is to determine whether the economic climate is conducive for the growth of business sector, particularly the capital market. In economic analysis, we analyze the movement of economic variables like GDP, monetary policies, inflation, interest rate, savings and investment pattern, tax structures, etc. And then study the relationship with expectations on stock market performance, both long term and short term. These relationships are then used by investors to select the right investments. Now, tools for economic analysis. Tools commonly used for performing economic analysis are growth rate of gross domestic product, GDP. Next is industrial growth rate. Third is savings and investments. Next, inflation, interest rates, monetary policy and liquidity. Fiscal policy, tax structure, infrastructure facilities, budget deficit, foreign investment, exchange rate and balance of payment deficit. These are the tools for economic analysis.